Thank you, everyone, for being here this morning. And we're looking forward, Mr. Claiborne, to your presentation. Karen, again, if I ever miss a week not thanking you, the topics, the themes, everything has been so relevant and valuable for us. I really appreciate the folks you've brought in, and we look forward to today as well. Any comments about May coming up prior to your introducing Mr. Claiborne?
The only comment there is it's going to be exciting, just like it has been through the year. I believe for the month of May, we're going to be hearing from Veterans Services, and I'm really excited to share that we're going to have the U.S. Senator, she's a junior senator from Illinois. Tammy Duckworth will be one of our speakers, and she's going to, share with us, this is her first term as senator, but also her time being in the military, her time being at the head of the ship of the state of Illinois on services as it relates to veterans, and still the challenges that are there. So I'm really excited for her. Our brand new member, Brian Cross, is going to kick us off during this month. As you know, Brian Cross is the director of Veteran Services, and he's going to talk about all things veterans. So, if you know any veterans, it would be good because he's going to share a lot of resources that are available for veterans. So we're excited. And then so that's the month of May, and the month of June. I forgot what we're doing the month of June. We've got a schedule. We're all scheduled. In fact, we had scheduled all the way through the end of the month of June. However, once it was decided that we were going to have the installation at the end of June, we had to push somebody off to July. So just, tune in and be excited, okay, because we are. One thing I did want to share, I sent out an email yesterday to schedule a meeting for the Social Justice and Equity Committee. We, of course, have had one meeting, and we're looking forward to the next meeting as we set our agenda for the rest of the year. So I've heard from a couple of people already. Gary, I have not heard from you, so I'm looking forward to hearing from you so that I can set the meeting. With that, I'm ready to introduce our speaker.
Thank you, Karen. Let's go into that now. Thank you very much again for inviting Mr. Claiborne and those other great speakers we've had thus far.
Okay, I just lost his. Hey, you know what? Rather than me going into his background and what have you, I'm going to have him to introduce himself. I'm really excited that Mr. Claiborne is with us today because, when we start talking about wealth and building generational wealth and all those kinds of things, we just kind of gloss over it. So I'm really excited about him being here today. So, Mr. Claiborne, could you share with us, who are you?
You hear me?
I can.
How's my audio? All right, great. I work for Wintrust Wealth Management, and what we are a wealth management team building wealth for small businesses, entrepreneurs, people all over the communities, moms and dads, brothers and sisters, kids and adults, people of all ages. Our goal is to educate and to help people make smart financial decisions so that way they can empower themselves through wealth. Because wealth is a tool that can help you go through life and also a tool that can help build communities. So Wintrust as a community bank always has been focused on the community. And what we're known for is for community participation. Also, Karen Yarbrough, I want to give you a thanks because as a veteran myself, I've talked to you in the past, and I appreciate your work that you do with veterans. I've met Brian Cross, excellent person. You do a lot of great things and have done a lot in Cook County to help veterans be empowered. And I think that's a really, really good thing as a veteran myself. Now, also, one thing we want to keep in mind is that the things we're talking about in this consumer protection series, as far as it pertaining to wealth and wealth building, it goes into a lot of different areas as far as how to protect yourself as far as creditors, how to protect yourself as far as making sure you have the right influence, how you protect yourself as far as doing things that are important for your family and for yourself to be powerful. So I came up with these three critical tools You want to know better. You want to grow better so that you can show better. So having the knowledge, knowing better, helps you do better, grow better, and then helps you actually show better. You have things to show for it at the end. So getting into our presentation, how much time do I have, by the way, Stu? I'm not sure how if I should stretch this out or be short, or how much time do I have for this presentation?
You have enough time to get your message across so it generates questions, okay? Did that answer your question or not?
So, yeah, we adjourn at 1:30. When we close at 1:30, you want to just have provided time for questions prior to that.
Yes.
All right. So a little more background about myself. I've been in the business about 15 years. I'm a broker-dealer representative and an investment advisor representative. So what that means is I help build portfolios for clients. I'm a licensed insurance agent, and also I have a particular expertise with investments. So now I offer fee-based and also transactions for clients. So that's what I do on a day-to-day basis. So I meet with families, individuals all the time. One thing I want to mention, which is powerful for people, and even in this presentation, is that it's always good to ask questions. Okay, it's better to write your questions down. So one thing I always tell people when they go into a meeting with any financial professional, and this is just good in general, and many people do this on their own already. They've been told this or were raised with this idea, but it's very critical and very helpful, and it can empower you and protect you down the road if you just get into the good habit of getting a notepad, a piece of paper, whatever you have, get a little sketchbook, whatever it might be, and write down your questions and write down the answers to those questions. Because if you're dealing with finance, oftentimes, a lot of the information that you get may not be clear to you in the beginning. So when you have these things written down, it gives you like a journal to go back and see what information you received and to compare it and make sure that information is correct. So if you're doing research online or comparing with other people that are advisors or other people that are giving products, financial products and services, you can kind of compare notes to see if you're getting accurate information. If you're hearing the same information over and over and over again from different sources, it gives you more confidence that you have the correct information. If you're getting information that's conflicting, then that's when you want to try to figure out, okay, what is the correct information? Maybe do more research on your own, or get professional help from someone who might be an expert, that's someone who you trust. Another thing I think is very important is that bring someone, when you have a financial meeting with an expert or with an advisor or with a loan officer, it's not a bad idea to not go alone. So you usually get a buddy. In the military, we had battle buddies. You had your battle buddy that was there, joined to you by the hip, that was there with you all the time. Your battle buddy was critical to helping you get through the most critical times in your military experience, whether it be something as simple as an inspection or something as serious as going into a conflict. So bring someone with you that you trust, someone that has experience, someone that's knowledgeable, someone who cares about you and what you're trying to accomplish. That could be a family member, it could be a friend, it could be anyone, a loved one, it could be your spouse, but someone should be there with you to kind of also be a second eyes and ears and maybe help bring some issues or some questions you may not have thought of. That's always a good idea just in general, okay? And then the third thing we want to talk about is building your financial team, okay? So that's very important. The holy trinity of finance is make sure you have an experienced and knowledgeable and a person who cares, but also bringing that into the same field with your team of an accountant, which could be a CPA, it could be a bookkeeper or whoever, but some kind of accountant or CPA that's in your corner. Many people don't realize that a person who does taxes or a person who does your tax preparation at the end of the year may not be an accountant or a CPA. There's different levels and different stages of accounting and different levels and stages of expertise in the accounting field. You have people that are just tax preparers. The tax preparer can prepare your taxes, may do a good job doing that. If you get more complicated or more serious financial
I think you muted yourself by accident, Mr. Claiborne. Okay.
Professional accountant. So an accountant and a CPA may not always be one and the same thing. You have controllers. You have also tax attorneys. All these people work in the accounting field, but they're not all necessarily qualified to do the exact same thing, or they may have different expertise. So you want to make sure you have an accountant that's good with three areas, making sure that they're good with knowing the tax law and the changes, but also understanding how it affects you personally. And sometimes it can give you advice to make sure you're making the right decisions, especially if you're a business owner or an entrepreneur. So that way you can do things and plan ahead for what you're trying to accomplish. Because oftentimes a tax preparer might tell you, oh, we can write this off, we can write that off, we can write this off. So now you don't owe any taxes. You get a big refund check in the mail. However, when you go to the bank to apply for a loan, they look at your taxes and say, well, you don't make any money. Your business is not making any money, so we can't give you any money for a loan. And so, well, this is why I did my tax. I had this preparer help me with my taxes. In your mind, that's just my tax person. That's my tax account, my tax lady. You may need a CPA to advise you and say, wait a minute, you know what? If you want to go down this path, if you're trying to expand your business and you're trying to do this and that and the other thing, you might want to make sure you show some assets on your balance sheet. You want to make sure you show some assets on your tax return. It may be a good idea, even though you might have to pay a little more in taxes, to not take all these deductions or write off all these deductions that makes you look unprofitable to a bank or to a financial firm, okay, if you're trying to expand your business. And that's a tax strategy. It's nothing that's not, a loophole or do anything around to escape the books. It's just a matter of what type of image you want to show to people that are going to potentially try to expand or improve your net worth or your business. So if you have a tax return that shows that you are constantly losing money because you're writing off every little thing you possibly can, it makes you look unprofitable. If you show income coming in, yes, you're paying more in taxes, but it actually makes you look better to a bank or to a lender. Okay, if that's what you're trying to do. And some people may not be looking for a lender or may not be looking for expanding their business. In that case, getting all the deductions you possibly can get actually might be to your benefit. Businesses and corporations do this all the time. In certain years, they may not write off everything because they want to try to raise capital and they want to look as profitable as they possibly can. And you have more profit, you're making more money. You're making more money, you pay more taxes. When you start writing things off, it shows that you don't have any net income. When your net income starts to drop, it looks like you're not as profitable. So that's just a thing to keep in mind. Now, also an attorney, you want someone who's knowledgeable and also that is also attentive to your needs and concerns. And then finally, we have your financial advisor. Financial advisor could be someone who is a licensed financial rep like myself. It could be someone who was your banker who's very knowledgeable. It could be anyone in the financial industry who's a financial professional, preferably licensed. Okay, and there's actually ways where you can check to see if you're an insurance agent or if you're a financial advisor, whoever that might be, is actually licensed. There's websites you can go to. NIPR, for example, is for insurance professionals. So they can actually go and look up their record and see if their education level, you can see their experience. It actually shows that that person is actually an insurance licensed professional. If they're handling securities or investments, then there's the NIPR, which is actually for investments. NIPR shows you if that person has a license, what kind of licenses they have. Also, if there's any disclosures or things on their record, where they've been, the entire financial career is on that website. And all you need to know is their name and see that they work in it. You can look that person up. Okay. But then, so once you have that, when you have these professionals around you, your attorney, your accountant, your financial advisor, you want to make sure you have a relationship with these people. You want to get into a situation where it's just a transactional thing. I've dropped my taxes off at the end of the year. They do my taxes and you bring it back. You want to develop a relationship with these people so that way they are truly your team. And then as time goes on, your needs might evolve and change. Their needs might evolve and change, or as far as how their business are expanding, people that retire, things like that. So you want to make sure that you're always making sure you have a team. These people are around you. They're looking out for your best interest. And at the same time, as you progress through life, your team may expand, your team may even change, but you want to maintain a relationship. Somebody that you can call up and say, hey, I have this question. Can you help me? And that's the key thing I want to reiterate is that if they have to be helpful to you. So if you had to always stand in line it's for 2 hours just to go, get their autograph, that may not be the person that's in your team that really is your fiduciary. Okay. Now, these people that I'm talking about are truly, and I touched on that, they're the fiduciaries for you. They have you in their best, they're looking out for your best interest first ahead of their own. Okay. So now, once again, they have to have experience, have to be knowledgeable, they have to care about your business, about your life, about your family, and so on. Okay. Now, there's questions you can use to try to sort of interview or try to understand what types of characteristics or what types of ideas make the most sense for you when you're trying to find this team, you're trying to build this team. For an accountant, then these questions are very similar, but they're a little bit different. They're going to be answered very differently, even though you may ask the same question to the different people. Okay. First of all, if you have a CPA, we're trying to interview a CPA and trying to find if you have a person who's really a true tax professional, who's just not just doing your taxes, giving it back and getting the highest deduction. A person is going to actually help you get to the next level. What you want to be able to ask them is, how can you help me if I get in trouble with the IRS? Okay, that's a very, very critical question to ask someone, because not all tax professionals are equipped to do that. If you have a tax problem with the IRS, they may be there with you, and they may fall out. They might disappear all of a sudden. They might be hiding under the desk and walk in their office. You want to make sure that if you have a problem with the IRS, that person is qualified and has a plan and a process to be able to help you. And that leads me to the next thing. You want to know what the person's process is, okay? What's your process for dealing with clients? How do you serve your clients? What kind of a turnaround time should I expect? If I give you my documentation, what kind of privacy measures do you have in place, okay? Privacy and processing go hand in hand. Your personal information in your social security numbers, your address, your date of birth, things like that, how your professional handles your personal sensitive information is very, very critical, because identity theft is a real thing. People can get it digitally and they can get it through paper. And people have the idea in their mind that if it's in the computer, then it's somehow at risk, is more at risk than being on paper. More fraud is committed through paper theft than anything else. That's how most fraud actually occurs. It's because you wrote something with a check and they can see your account number and writing number on it. Or you left a debit card out and they got the number off of that debit card. It's very rare that they hack into your laptop or your computer or your cell phone and steal your information, because it's the encryption and the technology in our digital areas protect a lot of that stuff very easily. Yes, there are mass hackings and mass break-ins, but the damage that does pales in comparison to just someone going through your trash and getting a document, or someone seeing a piece of paper laying around your house, or someone going into a financial professional's office and getting a piece of paper, a cleaning person picking up something out of the trash can. That is more dangerous and more risky, and actually opens the floodgates for problems when you have that kind of information sitting out there, because digitally it's very difficult to get a social security number over here and an account number over there and this and that. They can, not to say that it's not dangerous, it's very dangerous. You have to take precautions to make sure you check your passwords, making sure that you're using strong passwords that have upper and lowercase letters and special characters, things like that. Not having your password just laying around. One person asked me, I get a question like this a lot, where people ask me, if you're trying to protect your data, should you put your passwords in your cell phone? Actually, data and the research says that putting your passwords in your cell phone is not a bad idea, as long as your cell phone has password protection on it, meaning you have either a thumbprint to get into your cell phone or a code to get into your cell phone. It's not a bad place to store your passwords. And a trick that I use often for keeping that information secret is that I don't put my passwords in exactly the way that they are said. They're coded. So if you look up, someone that didn't understand the code or the message would never understand what the password is. So the password might be, David's best friend. Okay, so who was David's best friend? They may not even know. That'd be something that would be irrelevant to anybody that picked up that message, that information. So something like that is a code that only means something to you, a hint to yourself. So it might be just half the password. It could be something like, the time I fell down, whatever it means something to you. Okay. Those are little helpful hints as far as keeping your information safe. Now, also, can you give tax advice? That's something that's very critical to ask your CPA or tax professional. Can you give tax advice? Not just give me some information about how this deduction is more and I get more deductions and more deductions and more deductions. But what kind of advice, when you look at my profile, my life, what kind of advice can you give me to do better things in my future? Is it a smart idea to be an S corp versus a C corp, or should I be a sole proprietor? Or am I writing off too much stuff? Okay, maybe it's a good idea. Maybe I should go out and look for a loan. Maybe I'm not ready to get a loan yet. Maybe I think I need a loan to pay off this debt or do this or that, whatever. But maybe it's not a good idea right now. It might be something that might be set me a step back further rather than help me get forward. And also, what areas of tax do you specialize in? Once again, in the finance world, we think that we go to the bank, we think that everybody in the bank is a financial expert. And that's just not the case. Everybody has a specific role in that branch, in that bank or that building or that financial firm. Your tax person has different set of skill set than a person who is a CPA or a bookkeeper or a comptroller. Your financial advisor who's a stockbroker has a different set of skill set than a wealth manager or a certified financial planner. There's different things. So what areas do you specialize in the tax industry? Are you just a tax preparer? Are you a CPA? Are you a comptroller? What do you do? So, and then also finally, what are your fees? Fees are critical. And that's one thing we always look at and think about, but we don't always ask that question. what do I pay you and how much is it going to cost me to do this type of thing? So do this type of work with you. So when you pair the process that they have, which is how they're going to serve you and what they're going to charge you, then you can understand if you're really getting the value that you want. Okay. And then now for your attorney, moving on to the attorney piece of it. So the attorney is very critical in your circle, your financial fiduciary team that's looking out for you. Your attorney isn't somebody you have in retainer necessarily. It's not like you're going to hire Johnny Cochran to be in the back, back of the room somewhere and just call him out whenever you have to get sued or hit a curb on the street, whatever. But your tax person is someone that you have a relationship with. Once again, the keyword is relationship, that you can go to, that it has a wide range of expertise for different things. And for everyone, it might be a little bit different. If you're a business owner and you're trying to build your business, you have a different set of legal questions than if you're just a family person, as your everyday housewife or everyday husband. You're trying to just do better in your community, but you still need someone who has certain legal expertise. When you get later into your life, you're going to start thinking about, do I have a will in place? Do I need a power of attorney? Do I need a trust? Should I maybe have a child with special needs? What kind of legal things do I need to put in place to protect my child with special needs? What happens if somebody falls down on my front yard? Maybe I do have a side business or a side hustle that I'm doing. What kind of things do I need to be looking out for to protect myself from lawsuits and things of that nature? So people don't think about that often. They think, attorneys for rich people. Who has an attorney? You'd be surprised. A lot of people, everyday people, have attorneys in their cell phones, and oftentimes 2 or 3. So you want to make a relationship with someone. It might start out just with a simple visit to our simple tour of different attorneys to interview them to find out who can write you a will. And that's something that everyone as a financial advisor advise that every person, I don't care if you're 25 or 125, you should have a will in place because anything could happen to you. There's things every single day. People at different ages pass away from different reasons. We just came through a pandemic or coming through a pandemic where unfortunately a lot of people lost their lives prematurely. Their lives are cut short. And you have a lot of estate issues now that are being addressed in the courts that could be a lot less taxing to the families if there was actually some kind of will or some kind of final wishes actually in place. And every so many years, you want to go through and revise that when your life changes dramatically. So if you're a college student, there's nothing wrong with having a will as a college student. I mean, something could happen to you, God forbid, and you might have things that need to be addressed. You might have assets and property, things like that. Now, if you're a minor child, of course, you may not need one. You have parents. Your parents are going to be the ones to take care of your assets and things like that. But once you are an independent individual out in the world, and you start accumulating assets and accumulating responsibilities and liabilities, particularly if you have children, you need to have a will in place to make sure that things are there. Now, Cook County has a great, and you might have heard from one of the attorneys here on the panel for the consumer protection program. Hopefully, you won't need the will. Okay, if you have your assets and everything in place, and you have all the documentation put on your accounts and all in your property, things like that, the will hopefully would not even be necessary. But the reason why you want to have it as a financial advisor, telling you as a financial advisor, the reason why it makes sense to have that will is because there could be something that's missed. So if you do all the proper steps, it's a whole other conversation, but if you do the proper steps, making sure all your accounts have beneficiaries on them, okay? Making sure that you have the correct titling on your accounts. So some accounts should be joint, some accounts could be sole ownership, but every account should have a beneficiary listed on those accounts. That's the majority of your assets. But then there's other things that you can even put a beneficiary on your home, your individual property. So your house you can have a beneficiary nowadays in Cook County with the transfer of death instrument that the Karen Yarbrough has at the Cook County Clerk's office, which was created when she was working for the Cook County Recorder of Deeds. So when those types of things are important, because if something happens to you, God forbid, it tells the courts and tells the world where you want your things to go. Okay. Now, also, we want to talk about trust. Now, that conversation is good to have with an attorney because not everyone needs a trust, but in some cases, a trust might be helpful. If you have very complicated issues, maybe a child with special needs, once again, maybe you have a parent or a loved one you're taking care of, and something happens to you, what happens to that individual? Trust is very powerful tools or resources to basically help streamline and define for everyone around you what happens with those things you care about and those people that you care about. Okay. Now, once again, what type of law do you specialize in? That's the question I would ask your attorney. Every attorney doesn't do the same things. Many of us already know. The person who specializes in estate planning is the person you want to have in your phone book. Okay. The person who is maybe a criminal attorney may or may not be important. Okay. Unless you're going out robbing banks and things like that, it may not be something that's really important to you, as far as your everyday life. Well, but if you have a person who's specialized in estate planning, a person who specializes in tax law, those are things that are very common that, believe it or not, even if you don't have to be a millionaire to need someone who has some expertise in tax law. I had a client some years ago, and she took a part-time job, and she was and then when she was about 70, she retired from that part-time job. She had her first career, then she took a second job, and they did a mistake on her payment. She thought she was getting this amount of money, and it turned out she was actually getting a lot more money, and they weren't reporting it to the IRS or to the taxes. So she had a huge tax liability that was something in the tune of almost $100,000 worth of unclaimed income. The IRS just came on their radar one day, and they were basically ready to take her house, take her car, take all her property, and sell everything, auction everything off, because it snowballed to the point where she had no idea where to go, what to do. But when she sat down with a professional, they were able to get that stuff taken care of and bring that stuff down, and then she was able to keep her house, keep her car, and then get a plan. The IRS even decided, we understand the mistakes are happening. The IRS actually forgave a lot of that debt or those back taxes. They didn't hold her accountable for all that stuff. But she was able to retire peacefully because they realized she wasn't trying to hurt someone. We have the idea oftentimes the IRS is this big, evil, dark entity that's coming in to take all your stuff. That's not necessarily the case. Oftentimes the IRS is always willing to work with you. From my experience as a professional, 15 years, I've never ever seen the IRS be hostile to anybody. If they were working with that person. So there's so many avenues that a professional tax attorney knows about that can actually help get you out from under. I have so many stories I could tell you about this that can get you out from under tax liability, but you got to know about it.
Sean, could you stop for one moment? There are some questions in the chat that I'd like to get to, and then we can return to your presentation. There's a question from our president. Is investment of pre-tax or post-tax money better in the current tax environment? Can you respond to that?
Okay. So post-tax is always better. If you are able to get that. So what that means is we're talking about typically we say post-tax or pre-tax. What we're talking about is also qualified or non-qualified funds. Qualified funds meaning they're qualified for tax advantages. Okay. Now, pre-tax money is money that's never been taxed before. So, and also depends on how you use it as well. So really it's just, but in general, post-tax is better because if you have the right post-tax money, which is Roth IRA money, okay, that money because it's already been taxed, it's going to be tax-free forever as long as you follow the rules and guidelines. Roth IRA money is money that's been around for at least 5 years, money that you're not going to spend your at least 59 and a half, and money that has been invested or maybe not invested, but hopefully invested to grow and multiply. So if you start out with, say, for example, you could have a $50,000 Roth IRA when you're 25, and then when you're 65, that $50,000 Roth IRA could be $500,000 or $1 million if it's invested well. It's not unrealistic at all, to do something like that. So say, for example, now you have this $1 million Roth IRA. All that money at 65, or actually was 59 and a half, is tax-free for you permanently for life. It's tax-free money because it's Roth IRA money. That's post-tax money, okay, after-tax money. Now, pre-tax money is good for two things. It's good for getting tax deductions today. So if you have a 401k at your job, you're not participating in a Roth 401k. We talked about the Roth money. We're just doing pre-tax money. You put money into your 401k, that's an example of pre-tax money, okay? You can also kind of do a hybrid of it with an annuity. So an annuity is a way to put money aside and keep it tax deferred. So it's still post-tax money sometimes in some cases, but you have tax advantages because now that money is tax deferred. And that's the third thing. So there's pre-tax, there's post-tax, and there's also tax deferred, which can be used for pre-tax money or post-tax money. Something that's tax deferred means you don't pay until somewhere down the road, which is good for building.
Okay, Mr. President, does that take care of your question?
Yes, on the Roth IRA, though, just to follow up, on the Roth IRA, do you pay tax later on the gain, or is that not taxable either? So that's a pretty terrific deal then.
Yeah,
right, exactly.
Because right now, aren't we frankly right now at a low level of taxation. I mean, there's a lot of changes in what's deductions and so forth. But I suspect that for most of us, when we reach, our senior years, I'm kind of there. But for others, their tax rate's going to be much higher probably. So it's better, it seems to me, to do post-tax right now. Invest if you can in the Roth IRA.
Or if you can. Now, keep in mind, any kind of IRA, you have to have earned income to put money into the Roth IRA. So the Roth IRA, there's caveats to everything. So when you have a Roth IRA, and I'll just give you the breakdown of what this is in a nutshell, what makes the most sense as far as how to handle and how to acquire a Roth IRA. So Roth IRAs are best to start when you're younger, when you're working, because you have to have earned income, either from a business or from employment, in order to put money in. Once the money goes in there, you've already paid tax from the money at the beginning since you earned it already. It's already been taxed. So it grows in a tax deferred or tax-free, really, tax-free inside of this Roth IRA. And now all the interest and all the gains and all the capital gains, everything that's being built up in that account from the interest you're earning is also tax-free for life, as long as you don't take that money out until you're 59 and a half and it's been there for at least 5 years. Now, for seniors who already have money that's not in a Roth IRA, sometimes the temptation is, I've even seen on social media and things like that, the mistake of advisors telling people, well, take your $500,000 Roth or regular IRA and put it into a Roth IRA. You can do what's called a Roth conversion. Roth conversions are for people that are younger. Reason why is because of this. If you try to convert money that has not been taxed into post-tax money, guess what? All that money is going to be taxed at that point. So to convert money from traditional IRA money into Roth IRA money, all that money becomes 100% taxable at that moment. So what we do is, as a tax strategy, as clients get older, if they're not usually over age of 50, I would say, and depending on the size of the account and so on, let's sit down with your tax person. Once again, we come back to that team of fiduciaries. Let's go to your tax person. Let's ask them, how much money can we convert over this year without you taking a big tax hit? So you have this traditional IRA or 401k at your job, as an example, and you want to make this money tax-free for life now. But maybe you're 55 years old. Let's say it's $300,000, $500,000 traditional IRA. If you convert $100,000 and put it into a Roth IRA, yeah, great going forward. It's going to be tax-free for life going forward. But to get it from the 401k that was a traditional 401k into the Roth IRA, you got to pay tax on all that money. They can't get around that. You're going to pay taxes at least one time, unless it starts out in the Roth IRA. So the $100,000 comes out, the IRS takes $30,000 off the top, and then the $70,000 goes into the Roth IRA. Now, you can make that $30,000 going over the next, many years of your life. You could, but is it really advantageous to try to take a step back with $30,000 and then try to go forward to get that money back and then build on top of that? Probably not. If you're doing it the other way, say you're 35 years old and you have the same $300,000 traditional IRA. You talk to your tax person. They say, well, let's take out $15,000 this year. And over the next 20 years, we'll just pinch off $10,000, $15,000. But all that's going to do is maybe increase your taxes by $500, $100, whatever. Every so many years, every couple of years, we pay some tax or whatever like that. You don't have to do it every year. We can do it. We can choose years. You have bigger income. We can do it. You got laid off. We can do it. So you got laid off from the pandemic and you have money sitting. You didn't make any income this year. Maybe this year we take $15,000, $20,000 and put it into a Roth IRA, convert it over, take it out of your traditional IRA or 401k and convert it to a Roth IRA. That's a good tax strategy. So then now that money starts at $15,000. If you don't do anything to it, if it's invested properly, the realistic expectation is every 7 to 10 years, that $15,000 should double in value. That's how you judge whether an investment is good or bad. That's how I judge it, how an investment is good or bad. But, so if an investment can...
I want to get to a couple more of these questions. I'm sorry for cutting you off, but there's a question here. What is an enrolled agent? And what do you think of enrolled agents as a part of a person's financial team?
I'm sorry, I didn't get that. A what? Enrolled?
Enrolled agent. Okay, this is B. Parker. Who's
not sure
who's it? B. Parker? Okay, we can come back to that. Maybe that person stepped away. Do you recommend any password protection program, where you can coordinate your passwords?
I've not used those personally. I don't think they're necessary, to be honest with you. But I mean, if it helps you, I mean, definitely, I think it's a good idea. I don't like the idea of adding too many layers of technology if you're a person who's not really savvy with technology. If you're not a technology-driven person, you're not constantly using social media or playing with gadgets, I don't like the idea of layering a bunch of different apps and things like that on top of apps and on top of apps. One method that I use for keeping passwords straight and clear, I start out with a very complicated password. Okay, that's at least minimum 10 characters. Start with a very complicated password, and then from there create a system for yourself that maybe you can even make just subtle changes to it. So you don't have to use the same password with every website or every place, but just have a different change to it. So, for example, if your financial passwords, maybe you think of your friend Bill, who's a great financial expert to you, or maybe you think of a certain place you've been to, whatever. Or maybe you start to coordinate, whenever you go to do a financial password, you think about the place where it is. And that's how you kind of create a password around that. So then whenever you see that thing, you're thinking about the password. These are simple mental tricks that you can use. I use those all the time. So, as a financial professional, I am juggling about at least 20 or 25 passwords in my head all the time. But I use them all day, every day. But what I do is, to keep myself clear, is that there's something about the name of the institution, there's something about the place and location that tells me as a hint what that password should be. And so if it's wrong, it's not hard to reset your password. So keep that in mind. But yeah, I'm not against using any kind of software, but I caution against using too much apps if you're not technology savvy.
Understand. So let's see. Do lenders have a favorite credit bureau when considering whether to loan you money?
Yes, they do. So every bank has preferred credit bureaus where they pull their credit from. So, for example, we use Equifax. That's what we use. Some people use in the Midwest, TransUnion is usually the most popular. But yeah, every bank has the preferred scoring system, even internal. So some banks might use a credit reporting area, like one of the three bureaus, like Equifax, Experian, or TransUnion, and they also will have typically some kind of an internal scoring system that they use, that they've developed, particularly the banks that have been around for a long, long time, and larger banks. So they have their own internal scoring system that pairs up with that to try to minimize their risk. Because keep in mind, it's not they're just trying to decline everybody that comes to the bank. That's not a bank's goal. The goal of the bank is to make money. So if they lend money out and the people pay on time, they're happy. But they're also trying to limit risk because for every one loan that goes bad, they have to make up something like 10 or 15 loans to cover for a loan that goes bad. So the risk is very, very high for banks to lend money. That's why they're so cautious and so strict about the requirements.
I see. Okay, I see B. Parker is with the clerk's office, and I think she's saying she can't unmute. I think an enrolled agent is a tax person. However, should that person be a part of a financial team? But it sounds like you're not familiar with that terminology of enrolled agent. Is that correct?
I never heard of an enrolled agent. The key terminology for people that work in the tax field. So yeah, tax preparers, which are just licensed tax preparers, and that's changed a little bit. I used to be a tax preparer years ago when I was in high school. I started out doing tax and things like that. But then, so those are back then. You could get a tax preparer's number that the IRS gave you or the government gave you. I still have it in my basement somewhere. But this number, and that's where most people became like your tax preparer. Now you go to see at H&R Block. My mother worked for the Treasury Department, so that's kind of how I got into tax and things like that. So, when you're a tax preparer, that's probably where that terminology came from. But that tax preparer is typically a non-licensed, non-trained person. Okay, then you go to the next level up. Now it'll be like a bookkeeper. Now, a bookkeeper is typically a person who's actually been trained. You might have a degree. An associate's degree is oftentimes all you need for something like that. You can get a correspondence course to become a bookkeeper. Then you start to get into the higher levels, which are accountants. So then accountants, and the holy grail is a CPA. The CPA is the person who can do everything. And then it goes up from there. But then you start getting into CPAs that are comptrollers, CPAs that are controllers, CPAs that are auditors, things like that. Now, CPAs are what you really want to have. Let me be honest with you. Not every person necessarily needs a CPA to get their taxes done. If you find a tax preparer that is good and they're just getting your taxes done, you have very simple, needs. You just want to make sure you get your your child tax credit, properly done, and make sure you get all your deductions well. You're not starting a business. You're not trying to expand a business or anything like that. That might be fine for you. Okay. But at some point, you still want to have a relationship with an actual CPA, because then you started getting tax laws, and we started getting the more complicated things like, if I'm transferring my IRA from a regular traditional IRA to a Roth IRA. A tax preparer is not going to be able to advise you well on something like that, because that's not what they're trained on. They can all they can do is do your taxes and give you a number. But a CPA will tell you it's a good idea to do that, or is a good idea to do that. Or if you want to do it, this is how much we think we should do. We should do maybe 10,000 versus 50.
So Sean, you caution us about using, layers of technology and what have you, especially if you are not educated in that area. We have a cybersecurity person on staff that we pay a heck of a lot of money to. We actually share that person with the city of Chicago. And there's a program that we use in Cook County that's called the Security Mentor. And we are mandated in the clerk's office to, on a monthly basis, to review all kinds of data and information that kind of cautions us to do or not do or be aware. And every week, this gentleman always is cautioning us about what's out there, the threats that are out there. And that's his job. I mean, he does it 24/7, paying attention to what threats we have. I think you know that we oversee elections, and so that's very important for us, but also as it relates to vital records. A breach anywhere in our system is problematic. So I really appreciate having this guy, and I appreciate you saying what you said, as far as these different layers. I mean, there's all kinds of apps out there to do everything. But I guess if you don't know what you don't know, maybe you should ask somebody, or you should just not do that. You agree?
Right. With something, yeah, definitely. Never get involved with something you're not 100% sure about. Not transfers from investment advice. I mean, people oftentimes heard, "Oh, my friend had this annuity, and it was great for them," and then they get it and they have a horrible experience, or they lose money, because not everything works the same way for everybody. So, yeah, making things more complicated for yourself never helps you. If you understand it and it's not complicating the process, then it's a benefit. So I'm not against using apps and things like that, using technology. I'm all for technology, but don't bite off more than you can chew. Stick to something. Stick to things that you can control. What we're trying to do is manage risk. So risk is always going to be out there, and you can't avoid it. And as time goes on, risk, I'm not necessarily going to say it gets worse or better. It changes. And if it changes to you, if you're used to the old risk, and this was a risk that you were comfortable with and familiar with and thought you could protect yourself, and all of a sudden that guy retired, there's a new risk that is on the street. That person may scare you because you're not familiar with that person anymore. You're not used to dealing with that risk anymore. It's a new risk. May not be any more deadly than the old risk, but you have to get familiar with that risk and be able to protect yourself from it. So like I said, keep things simple, understand what you have in your fingertips, in your arsenal, and use that, and use experts. Get people that hedge of protection of your fiduciary team, a tax person who understands and sees everything through the tax world, your legal person who sees everything from the legal world, your financial advisor who's there to build wealth for you, to help to understand the money-making tools and avenues and things like that. And there are checks and balances between them. You have those three, and hopefully not in the same firm, okay? Hopefully not in the same building. Different people from different places. They also create checks and balances, because everybody's going to notice different things, have different ideas or different objections or things to consider. The tax person might say, "Yeah, write all this stuff off." But then you come to the bank and get a loan, and the loan officer says, "Well, we can't give you a loan because you wrote all this stuff off. Now you got to go back and amend your taxes." So those are the things. That's the reason why.
Yeah. Do you make recommendations in terms of investment vehicles, such as stocks, bonds, real estate? Does it depend on the person, exactly what they want to achieve, or what does it depend on?
Yeah, so I do give advice on financial instruments and investment vehicles. So it all depends on what your goals are. So there's no one investment that's right for everybody. And I think the number one, in my experience, the number one thing that is important to how you advise on what type of vehicle or product is right for the person is their risk tolerance. Okay, we come back to this word of risk. So some people are happy with getting 3%. Okay, if they get 3%, they're glad, they're good, they have their 3%. Some people, they need 10 or 15%. Okay, but 10% or 15% comes with a cost. It comes with market fluctuations. It comes with more risk. It comes with the idea of being patient. And so when the times are bad, when the pandemic hit, the market dropped 30% in one month. So, but now it's back way above what it was even pre-pandemic at this point. So it all depends on what that person's comfortable with, which determines what directions you're going to go as far as picking a vehicle, and also how you're going to use the money. If you need your money liquid, meaning this is your life savings or your emergency money is not going to be in the same place where retirement money is going to be in. Your money that's going to be used for your down payment for your house in 5 years can't be in the same place that you use for your everyday stock trading or investment or things like that. Because if something goes wrong and that money's not there when you need it, it defeated the purpose. Sure, you might make more money down the road, but you need your money to be available when you need it to be available. So that's something that also gives something strong to consider.
What do you know about Bitcoin?
You know a lot about Bitcoin. So Bitcoin and cryptocurrency in general is this word. So first is break. That's a big question, a big world. Bitcoin is a whole nother realm that go into. A lot of people don't know what Bitcoin really is yet. Still, I mean, a lot of people are kind of confused by it and don't understand like what it is. All it is an algorithm. It's just a computer piece of software. That's all it really is. So it's the reason why people are attracted to it in the finance world is because not just because it made a lot of money. It's making a lot of money in the last few years. I won't give advice. I strongly advise being very, very careful if you're looking at Bitcoin as a way to make money, because you got to be very cautious with that. It's not something that for the faint of heart. Okay, so you can there's no telling where Bitcoin itself as a cryptocurrency is going to go. If you're talking specifically about Bitcoin, there's other ones out there like Ethereum, things like that exist besides Bitcoin. There's even two types of Bitcoin. Some people don't know. There's Bitcoin and there's Bitcoin Cash, which is the two different things. But so when you go into the Bitcoin world, the reason why the banking industry and governments are kind of fascinated with it is because it actually creates a chain of record that did not exist before in a digital way that connected to currency. If you have a Bitcoin or any kind of cryptocurrency, you can actually trace every single person who's touched that coin through its entire history, which is unique. So, for example, imagine just from a conceptual standpoint, I give you a dollar bill. Okay, I pull out my wallet and I give you a dollar bill. Let's say it's $100 bill, whatever. I give you this dollar bill, but now anybody in the world can know at any given point in time who has that dollar bill in their pocket or their purse or their wallet. Not only that, they can look at every single person who's ever had that dollar bill, going back to the time that dollar bill was created. So if somebody wants to come in and do a loan, for example, and they say, I have this $100,000 worth of cash, go and put it into the bank, and then I want to go borrow money against it so I can do investment, whatever. There's things called Patriot Act. There's things called terrorism. There's things called money laundering and child trafficking and human trafficking. Where did this cash come from? Okay. How did you get this $100,000? You might show me some record to say that you did this, that, whatever, but how do I know this is where this money really came from? Did you steal the money? What did you do to get this money? Big cryptocurrency has the ability to basically verify every single dollar bill in that $100,000. And it can show you the entire transaction history of all that money, where it came from. And then when we do a business deal with you, we can even track the business deal, the real estate that you have. Who owned the real estate from going back to the dawn of that, when that real estate was first converted into crypto to the blockchain technology. The technology behind cryptocurrency is called blockchain. Blockchain technology is a chain of informational records that go along way back into the beginning of when that thing was created. And if you tamper with it, there's going to be evidence that you tampered with it. So that's why governments and why the financial industry is kind of interested in developing the blockchain technology and also cryptocurrency in general. I hope that answers.
Yeah. Yeah, I just figured we should talk about this, and you give us a thumbnail sketch, and thank you for that. Sounds like I should not take my retirement and dump it into anything like that. That's what it sounds like. But anyway, let's see. Okay, so we're kind of short on time. I want to let's see, I'm looking at, are there other questions? And I'm going to turn this back over to the president. Let's see, is risk managed by income averaging, contributing every month over a long period? So you buy both low and high?
Okay, so that's called dollar cost averaging. So when you dollar cost averaging, it's a very good way to try to level out the ups and downs of the market. So yeah, it does work to kind of manage risk. So think of your 401k statement, you're putting money in every single month of your paycheck or every single pay period. When the market goes up and down every day, you don't really see it as much because it's being masked by this money's being put into the account. Then also as well, when the market goes down, what you're doing is you're buying shares at a cheaper price. So when the market dips, a smart strategy, if you can remember this, every time you hear bad news in the market, it's not a bad idea to think about putting more money into your investment accounts. I mean, the people have the fear of when the market crashes, I need to take all my money out. Okay, that's the time to sit down with someone, a professional, and find out, what types of investments do I have? What is the risk that I have of maybe having a permanent loss versus a temporary loss? And then is it a time for me to add more money to it? Or should I just ride this thing out and wait until, the market comes back up again? And how long should that be? Nobody can predict, if it's going to be a year, 2 years, whatever. But you have history. Financial advisors have history on investments. So we can actually analyze your investments and see if it's probable or realistic, if this is going to be a 5-year wait or a 3-year wait or a 1-year wait or 1 month wait. You can kind of gauge it. Can't guarantee it, but you can gauge it by doing the research.
Sean, that sounds like playing the lottery, and I don't play the lottery. So I know people who have gotten involved with Bitcoin. They don't have a clue of what they're doing, and they just put the money there and just say, I've got Bitcoin, and I'm doing this or that or the other. But it sounds like people need to make informed decisions about how, what, where they spend their money and how they do their investments. I am at the 1:25 time, and it's my time to shut down and turn it over to Mr. President. Sean, thank you so much for being with us, but I think I'm going to have you come back because I really would like you to dive in to this whole cryptocurrency conversation. I think people need to know a little more about that, and especially before they get involved in it. So thank you so much for being with us, and I yield to Mr. President.
Thank you again, Karen, and thank you, Mr. Claiborne. Very relevant. Your expertise is sincerely appreciated. You really contributed greatly to our club today. So thank you.
My pleasure.
Just a few minutes ago, I just want to encourage everyone to complete the survey regarding our installation and recognition banquet event. We actually have 13 people that have responded, and 9 people are prepared to go face-to-face with that event out of the first 13. 4 said they would participate through Zoom. So I think we have only 1 that can't participate out of the first 13 folks that have answered so far. I sent it back out again last night on Rallyhood, so all but 5 of you should have gotten that, and then the rest of you, the 5 that may not be hooked into Rallyhood, be sure that you contact Armanda if you need assistance in doing that. And if you're not hooked up on Club Express, we're going to be billing, I believe, for the first quarter of next year on Club Express. That'll be out before June 1st. So there's only a handful of folks that aren't in Club Express. If you need assistance there, contact Bonnie. And we'll keep those things moving forward. Also, we had mentioned last week that the board approved our online auction activity. So we have some gifts already. We're looking for members and friends of the club to contribute items of some value. We haven't determined the minimum yet. That should be out soon. But if you have something you thought that others might be interested in bidding for online, please reach out to myself or Susan. And we'll certainly stockpile those and be ready to put those on the online auction service as well. Bonnie?
I also want to remind you to make sure that you're sending out the link to be able to have organizations put in for possibly being, selected as a group to get money, which we have to make the money yet, but we want to get the idea of who is out there, so that information has been sent to you.
Yeah, I sent that out a second time as well, so get those applications for grants out to your favorite charities and encourage them to get them in soon. I believe the deadline is May 15. So bring those back, and then we'll involve members in deciding who our favorite charities will be for this year. When we started today, I think I missed Gary coming on board by about 5 seconds, and I appreciate Val coming in with our opening. Gary actually called me and offered to close us out with a benediction, and then when I announced the adjournment of the meeting, he also now has the bell at his house, the gong, so we can...
Mr. President?
Yes?
Mr. President, as you see on your screen, we do have the flyer ready for our celebration of Military Appreciation Month, and these are our speakers for the month. We'll post this on Rallyhood so that everyone will have it. But I just wanted you all to be aware that we're ready to go next month, celebrating Military Appreciation Month.
That is really important, Karen. I'm glad you pointed that out. And I want to ask everyone still present today, when you receive that attachment, please post it in your social media so that we can get the word out and get more folks aware and participating in our efforts to improve this world, one project at a time, locally and globally. So be sure to post this, at least Facebook, Instagram, other groups that you might be involved in, so that the whole world knows about the wonderful speakers and programs we have in this club. Karen, you're doing a great job. Thank you for that. I think we've pretty much run out of time. It's 1:30. Gary, could you close us out with closing reflection? You're muted, Gary. Just have to unmute.
Now try it.
No, you got it muted.
You're good. We can hear you. Oh, you just muted yourself.
No,
There, you're good.
You're good.
Okay. Sorry about this, but I did prepare a invocation. Now it's the benediction. I think we need to be thankful for among a number of things. We should be thankful for the elected and re-elected public servants from the local election. Some of them, many of them, serve without even any, quote, pay. School boards, library board, other local elections. I think we also need to be thoughtful about we need rain. And
Yes.
Again today, it's mostly missed us. We need vaccine and everything else in India and other places like it. We need to see an end or a great reduction in the violence, especially in our cities. And so I say to all of that, Rotary, let's do our part. And now, I think this is from Lenore Sanchez. I'm going to ring the gong because it appeared on my back on my porch a couple of days ago. Unknown. Where's my gavel? Oh, where's my gavel?
I thought you had laid it down there.
That's the puppy.
Yeah.
Oh, I can't believe it.
Gary, isn't it up there? No.
I got this.
All right.
The meeting is adjourned. Thank
There
you,
you go.
one and all. God bless you all.